Wizards. Welcome to episode 32 of the Crypto Wizard podcast. Now, guys, it's a Sunday. Hopefully, it's been a good week for yourself so far. Hopefully, you've had some adequate rest over the weekend and you've managed to utilize the very slow period in the market to your favor to hopefully get some well-needed rest. However, over here at Crypto Wizard, there is no such thing as rest, and there's no reason to be resting right now because we have some incredibly exciting news and some incredibly exciting days coming up ahead of us, especially as we linger over to what is actually now the 11th day countdown of the Wizard platform launch. So the best way to start this off is to first of all mention the competition which has now gone live on Twitter and Instagram. Now, guys, if you haven't already seen on Twitter and Instagram, all you have to do is go onto there. There will be a link provided within the bio of this video as well. We have decided and we are currently discussing the possibilities of doing a Wizard live webinar within the Wizard platform itself at some point next week. The only problem is we do not know when we're going to do it yet, and we do not know if we will do it until we see what we deem a sufficient amount of votes. So that means, although we do not have an idea in mind, we have a rough idea on what we believe is sufficient and if you guys really want this webinar. So to actually break down what has been discussed and what we are deciding to do here, we'll be doing a live webinar going over the charts, breaking down the pairs individually. We'll be doing altcoins. We will be doing overall long-term outlooks, overall short-term outlooks. We will be discussing all kinds of different market movements and going over the Wizard platform itself and even the course content. There is going to be surprises. It's going to be crazy, and it's going to be one of the biggest videos, and as the first time ever as a community as well. Not to mention, we will be doing a potential live webinar with everyone involved. You guys can bounce back and forth. We'll be doing this in real time. It will be insane. All you guys need to do is go onto Twitter, go onto Instagram and get voting. And if we see enough of those votes, we will most definitely be doing this at some point next week. And not to mention the possibility, there's not just surprises, there's competitions. We will be giving away membership, free membership to the Wizard platform for a select few as well, which means if you guys are on the webinar at that certain point in time, and you may get very lucky, there could be a great opportunity on the cards as well, because let's hope by now you've seen the first teasers of the Wizard platform, the dashboard, the weather tile, all of the tiles that you've seen and I showed in the prior Wizard Wednesdays as well. I hope you guys have liked what you've seen so far, because there is a lot more where that came from. And over these next few days, we are going to be leaking many more teasers, many more reveals, and many more features within the platform itself. So if you're not looking forward to it already, I assure you from now, you are going to be looking forward to what is coming forward, so to speak. So let's actually discuss what's going to be going on in this podcast as well, and overall just discussing very quickly as well before we do proceed to the full topic. Today's topic will be regarding risk. It will be regarding risk over life overall and regarding risk within the markets and investments and business. So we're going to be covering a general broad aspect of risk and then delving further into how it can actually fit into our lives in all different kinds of aspects. But it goes without saying, first of all, I am incredibly excited for this platform. As you can probably tell from every single video this past week, every single podcast over the past few weeks, I've been getting increasingly more excited, and you can probably tell from the tone in my voice, I'm just bouncing across the room right now. I've been bouncing across the room in the office. The Wizard team are so excited to start showing you what's actually coming forward now. Guys, 8 months in the making, and to finally think in 11 days time this thing is going to become a reality. It's giving me shivers knowing what is lurking behind those web pages we have not yet shown you. And the beauty is, during the live webinar, we will be giving and showing exactly what is lurking within that platform. So it's going to be crazy, it's going to be insane, and I cannot wait for everyone to start seeing what's coming forward. But lingering on that note as well, just make sure you have checked out the bio below. I will ensure the links are in there for convenience to make sure you guys are voting and ready to go. But the topic of this podcast is risk. And why is it risk this week? That is because it's been a very interesting and very slow period in the market. And I think the way these current market conditions are, the way you would actually be able to sustain and overcome these market conditions and still remain profitable isn't actually due to the chart analysis itself or the calls levels or anything like that. It's actually due to risk management and your overall understanding of risk, trade management, position management, stop loss management, take profit management in general, and understanding risk. How much capital is being allocated per trade? How much capital is being allocated over a period of a month? This all needs to be considered when taking in the overall bigger picture of what you are doing as a trader and investor. So the best way to start this off is actually having a little bit of a verbal market breakdown. Now, of course, this is a podcast. I cannot show you the charts within this podcast, but I can definitely explain it to the best of my ability and let you know a little bit about what's going on in my mind right now. The question you're all asking, am I still in the BTC trade? And you are absolutely right. I am still in that BTC trade. I've been switched my bias, although we had a little bit of a miscalculated entry. I widened my stop loss, and many of you are asking, how on earth have you widened your stop loss and you're only losing 3.5% or 2%? And that's because my stop loss was already wide enough to cater for the current market conditions, and I calculated my risk as I always do with every single trade. So even in the event I want to take a little bit more of a risk and let's just say increase the risk amount or extend my stop loss or go for a slightly larger swing trade, I can comfortably do so because my risk is in management. And I'm going to be explaining this in much further depth very soon as well. But the best way to explain this, first of all, is the BTC dominance still at that 66% region, which is still a very promising sign for us that we should be following BTC first and foremost. This means by following BTC, we have a very clear understanding of where the remainder of the altcoins will be heading. Not to mention, the majority of altcoins that I have shown you over the past few breakdowns and videos, or even within the Telegram or on Twitter, you would have noticed the majority have already hit a very near bottom. So when you're using this in correlation with a higher BTC dominance, you've got altcoins at their very, very lows. Some of these altcoins are down over 95%. That's a discount on a Black Friday sale if I've ever seen one in my entire life. That alone is absolutely insane to think about. But then what happens when you consider where BTC currently is? It's not necessarily at any form of major low, not even really at a yearly low. We started off the year at $3,000, we hit $14,000, and now we're at a nice midpoint of around $8,000. Obviously pushing towards the higher end of the spectrum. It's still been a phenomenal year for cryptocurrency, and we've almost seen a 300% ROI at the current prices with BTC alone. So it's been a very good year for growth. And even though the final 6 months of 2019 has been a little negative, we have seen some downside, we have seen some consolidation. This was all anticipated and this was very well expected. The only difference is right now the market's got a little bit more confusing than normal, but I do believe I finally cracked the code on this complicated puzzle. So the first thing to mention in that aspect as well, obviously following in with the BTC alignments, understanding the dominance, that means we follow BTC. So BTC right now on a 4-hour perspective has finally broken out from the anticipated channel. The 4-hour chart is showing a very nice solid break of this level, and the 1 hour confirms this further with a huge rollover and break of this level. So with the resistance of the trend line broken, what we are now anticipating is the potential shift over to the bullish bias for our medium term swing, facing and hopefully anticipating the likes of 9,200 all the way up to 9,600. That is the first real targeted zone, and where we have been over the past few days. It's been around 4 days now at the exact same price levels of around $7,950. What's happened now? After breaking through this region, absolutely ripping through these charts, we have lingered around this zone of 7,950, give or take 8,000 as well, and we failed to break below. And this was expected because we spotted the head and shoulders on the daily, as covered in the prior Wizard Wednesdays. We started ascending a little bit higher after reversing from this level, so it was giving a bit of a telltale sign. One of my final confirmations of what should be the bullish breakout has now started commencing. So what I'm currently seeing here, even though I entered around 8,300, I believe it was, prices realistically, guys, as of now, it's only $200 below the entry level. So in terms of perspective, considering the majority of our moves are over $1,000 in profit, when we actually go for a move on BTC, we're looking at around a $1,000 move or a 1,000 pip move if you're going down the margin trading aspect. So when you consider that a $200 to $300 drawdown drawdown in BTC movement, that is actually very minimal in comparison to the overall trades we're trying to capture here. And to be honest with you, if you have been accumulating, if you notice the wick fishing zone on the images given in Telegram, the annotations, the label diagrams, I gave you the exact wick fishing zone of around 7,880, which we fulfilled and reversed from, and now we've broken out the trend line as well. So if you are following my theory right now, you are looking at an easy $1,000 bullish breakout on BTC. Now we've seen this movement. So the first thing to mention now that we've seen this breakout is caution. We've got around 2.5 hours left until the 4-hour candle closes, which means we need to exercise caution. And we also need to understand that with every broken trend line, there is usually a resulting retest before the continuation movement further. So I'm in two minds right now. I didn't actually add that second position on BTC. I'm still riding the existing one in drawdown, but thanks to my stop loss being just around that $7,800 region, it skimmed my stop loss. I didn't get stopped out and I'm still within this trade. As I did say in Wizard Wednesdays, if we did get tapped on the SL, I would have simply just waited a little bit of a push down to 7,700, 7,600, and from there onwards I would have continued with a new long position. But what's happening right now for me, the market's looking incredibly promising, and if we're going to start breaking through this $8,100 region, then reaching that $9,000 zone should be no stress whatsoever. And the same goes for XRP. We're seeing a very repetitive and progressive higher high and higher low pattern, which for me is indicating right now the easy final target. We're looking at around 31.5 cents up to 32 cents. And of course, we could see a little extension from there. But overall, you know, the overall target for this setup is 32 cents. And to see that come through potentially in a very short space of time, we're looking at a potential breakout on the cards for XRP as well right now. I'm not even joking. All we need to really do theoretically is break above around 0.297 approximately, and once we see a break of that level, we could see a little pullback to come and retest the 295 region. But overall, I believe we should be seeing a large explosion, and it could even take 1 to 2 candles to actually achieve that 32 cents region. So things are aligning, the stars are aligning, the Wizard platform is aligning, the competitions are aligning, everything is lining perfectly. It cannot get any better than this. And as you know, my favorite saying is absolute perfection. So with all of this perfection going on, let's take a little bit of a deeper dig into the terminology and the understanding of risk. And again, comparing these current market conditions, the current analysis I've just given you to understand risk overall. And the first thing to do is, by the way, if you haven't actually seen on the CryptoWZRD password page right now, there is also an article I've written, a nice little article on risk itself, how I view risk, what I actually think about risk, how risk plays a very fundamental and predominant role in all of our lives. And the truth is, risk is it's a scary word almost. Just even hearing the word risk can scare people sometimes, because when you hear the word risk, the first thing you kind of associate with is fear or danger or a negative. Because when you hear risk, there's always a risk of something. It's a risk of losing money, a risk of dying, a risk of getting injured, a risk of losing something, anything. There is a risk that whatever you're doing will not work out in your anticipated favor. Now, that is simply a normality of life, and this is something I've learned to adapt to from a very young age. When it comes to risk, people ask me, how do you still take so much risks if you have become established? Why do you even take so many risks? The truth is, first of all, being 24 years old, I'm still very, very young, although I feel like a 50-year-old man. I'm getting old, I'm getting slow, and I'm getting tired too easily these days. And that isn't just from the charts, I believe. I believe that could be old age kicking in earlier than anticipated. But even from that perspective, to be honest with you, risk has always been something I've never feared. I've never really been scared of much. I've never really been fearful of too many things. So maybe that aided me a little bit further in understanding and grasping this concept a little bit quicker than others did. But putting that aside, it had to be adapted and it had to be tested. The same way you trial and error a product before it goes to launch, the same way we're doing this with the Wizard platform. We've been testing this for weeks now, just ensuring everything is perfect for all of you. And the same goes for food, the same goes for chemical products, the hair shampoos, your shower gels, all of that stuff has to be tested and verified before it goes live to the public and before it can actually be used and implemented. The same goes for risk. The risk has to be tested. You have to get comfortable with it yourself. You have to understand what comes with risk, what are the side effects, and what even is risk. What is risk? Why is everything considered a risk? Because for me personally, I've taken so many risks in my life. I've risked a lot of capital. I've risked my own life many times to, I guess you could say, my own health to actually achieve my dreams. My own mental sanity has, a lot of this has been detrimented through the journey of success. It can happen to all of us, but the truth is, I do not see a risk in that because I've calculated the risk to reward. I've outweighed the odds versus the pros and cons. I've put everything into perspective. And one thing I've realized is when you actually take enough risks in your life, nothing is a risk anymore. And I've always said this, I've taken so many risks that I do not view anything as a risk anymore because life itself is risky. And this is something that you all need to understand. When you're sitting on the edge, you've had enough at work, you want to quit your job, you said enough is enough, I want to leave, I'm done with this, I need a new life, a new means of living. Well, guess what? Take the risk. What's stopping you? Are you going to die if you lose your job? Are you going to potentially have less money than you did at your job? Yeah, you may very well do so. Is it going to be easy? Absolutely not. But guess what? You are not going to die from that. You're not going to suffer horrifically or permanently. It's always temporary. It's just a little glitch in the matrix, so to speak. It's just a very temporary procedure. When it comes to understanding risk and when it comes to actually taking risks in your personal life, you need to understand the pros and cons of certain risks. And this is why I do not even like using the word risk, because when you hear the word risk, it's just so negative. It puts people off and it makes you think of bad things. In fact, I can't even think of a better word for risk. I would even say trial. I would say trial or testing, because essentially when you are taking a risk, you are taking that gamble, but that's about not turning it into a gambling aspect and actually having a bit more of calculation, a bit more of a thought process behind each and every alleged risk you take. And this is why when it comes to trading in particular, one of the biggest things that we've kind of discussed over the past week is how BTC has been incredibly volatile, and we have seen a bit of drawdown. And to be honest with you, it's very rare to actually have these trading conditions when it comes to my personal strategies. Now, if you've been following me since the very beginning, you would know I very rarely actually get into drawdown. I very rarely get stop losses hit unless I've put those stop losses into profit or break even to be purposely hit. I very rarely lose trades, to be honest with you. As crazy as that sounds, it's very, very rare in comparison to the overall win rate. And that's come through risk. That has come through an incredible amount of money lost to actually achieve a specific strategy, to actually start understanding the markets, to actually gain a true purpose within the markets. I've had to take a lot of risks. I've had to risk, social lives, mental sanity, hours of my life, and potentially all of those night shifts I've done in the past and still do to this day. Let's say when I'm working till sometimes 9 in the morning, from starting at around 10, 11 in the morning, doing full 24-hour shifts. There's been times where I've been awake for 3-4 days in a row, just living off espressos, checking the charts, just trying to find something, just to wait for that aha moment, that moment to click. And that in itself is essentially deemed a risk if you think about it, because if I'm sitting there all day on the computers, there's risks of strokes, heart attacks, muscle problems, back problems. It can come from anything. There is, when you actually look at risk on its true deepest layer, essentially there is a risk of everything. So you do not need to worry about taking risks when it comes to achieving your goals, achieving your dreams, achieving your visions, because guess what? I could be sitting here right now whilst doing this podcast and have a heart attack and just die like that. And then guess what? What was I really doing that was risky? I was sitting here talking into a microphone, making content for all of you. And if I died out of nowhere spontaneously from doing so, would you deem that a potential risk? Because I haven't really done anything risky. The only real risk was nothing. Essentially, you're just doing what you normally do. So when you actually take that mindset into any other task that you would normally deem risky, you start to understand that actually, is it as risky as what I'm doing? Now, obviously, if you are going to backflip off a cliff without a parachute, that's incredibly risky, and you're taking a much higher risk than you probably should do. But when you're doing a normal thing, like let's just say quitting a job or something that does not actually physically harm you in terms of danger, you're not putting yourself into physical danger or physical harm. You're not going to lose a leg. You're not going to get decapitated or anything crazy by doing this specific risk. Then by all means necessary, it's not really a risk in my opinion. When it comes to risk, losing a bit of money, going broke for a while, or having to struggle, having to graft, having to get another job, work extra hours, that for me is not a risk. That is simply a temporary I guess you could say, side effect to taking a specific plunge, especially when it comes to quitting your job. If you've actually prepared in advance by saving money, by finding the job or finding your career path, or even establishing a business on the side before you quit your job, you're massively reducing the possibility of there being any real counterside or risk to your decision making. And this is something you all need to start processing, especially when it comes to trading. So the biggest thing to mention is the consolidation we've seen in the market. So I entered at around $8,300 and price dropped down to $7,900. Now, I could understand if some people were saying stuff like, my stop loss was hit. I understood that. Many people have not grasped the stop loss principles and concepts just yet. This is completely fine and something I'm striving to do before the Wizard platform is launched. There's already plenty, and when I say plenty, I mean hours worth of stop loss and risk management principles alone in the course. But when it comes to the content itself that I'm providing publicly, I'm trying my absolute best to drill in how to actually understand risk management within the markets themselves. Because what should be happening is, let's just say you have understood the principles and you have put your stop loss in profit. If the stop loss does get hit and you do see some form of negative equity taken out of your account from your stop loss being hit, it should not be more than 1 to, let's just say, 2%, especially in the beginning. If you do not understand trading, if you do not understand the markets, if you're still very new within this market, you should not be risking more than 1% of your overall account size on every single trade. Now, that does not mean enter 10 trades in a day of 1% risk each, because you're then exposed to 10% risk, and that completely counteracts the whole purpose of risking only 1% per trade. If you're slowly getting there, you've actually had some profitability, you've been trading for a year or two, you can most definitely start allowing that extra 1% breathing space. But this is the point again, risk management. How does it work? If you're risking 1% but you've got 10 positions open, that's 10% risk. You are way out of your guidelines. Even myself right now, in the rarest of occasions, I may throw in a potential 5% risk or even a 10% risk. There are times where I have gone down that route, but those are in very strict, precise, predetermined scenarios that only come around once in a blue moon, and maybe only once or several times a year if I'm actually lucky. And those are down to very different ideologies and very different risk management principles. I believe personally, when it comes to risk management, if you are new in the markets, if you have not seen profitability, or you have not seen the success you desire from your trading just yet, then by all means necessary, you should not be risking more than 2% per trade. And pushing it, you shouldn't even really be breaching that 1% region, because to be honest with you, it's not necessary. And with 1% risk, you need to lose 100 times in a row to actually lose your capital. So if you lose 100 times in a row, that's very understandable. But if you're risking 1% at a time, it will not be as painful as wiping out your entire account in one trade. And this is something that happened recently when BTC fell only around $100 or so. People were messaging me saying my account's blown, I've lost 50%, 60%. And the truth is, I cannot take fault for that, because when you're looking at a movement of, let's just say, $100 on BTC, or even $200-300, if your account is being annihilated within a single move of $100 to $300, that does not mean the market's wiped you out. It does not mean someone else has wiped you out. It actually means that you've over leveraged so massively that you have not allowed any breathing space within the market. And something like cryptocurrency, which right now at the time of speaking, after breaking out exactly from where I've said, has just jumped an extra $200, and it's almost at break even again from my initial entry price. Just by simply holding on for a few days and watching that drawdown unfold, I've been able to sit there peacefully, watch the drawdown, not worry about absolutely anything, mark out my key levels, and now price is slowly nearing where I entered again. And hopefully within an hour or so, I should be back at break even at least. And this is how you carry the risk from a short-term perspective and a long-term perspective and combine them both together. So what this essentially means is, even when I'm trading short-term, I'm still almost approaching it with a longer term image and a longer term horizon. So that means with these swing trades here, for this very rare example, where the trade did go against me, but I knew that we are still going to go higher. I knew the overall bias has not changed. And there's two situations you can do there. And risk also comes into this, because your outlook and your perspective on the markets is also deemed a specific risk. You risk how you view the markets. If you're viewing the markets incorrectly, that's a major risk to your account balance and to your trading profitability. So not even understanding the market conditions is a very serious risk in itself. And this is something I'm trying to throw out there. Absolutely everything in life is technically a risk. Living itself is a risk. And using that analogy, you could even be walking down the streets, guys, and something crazy could happen, a freak accident. There is risks all around us. So it's down to you to use that controlled environment you're within and control those risks and cater them to your specific purposes. So the good example here for BTC, we saw a little bit of drawdown. Now I could have panicked, I could have closed the trade, I could have just kept on buying more to prove that I was right to the market. But what I'd done was, instead of actually focusing on the intraday movements or focusing on the next few days, I started thinking, well, hold on here, it's gone a little bit against me and there's an opportunity here to either add another position or let this trade ride in a drawdown. Do not risk too much more. Maybe push an extra percentage. You can afford to do that because you've made several thousand% this year. It's all about relevance. After making several thousand% this year, I can comfortably risk an extra 1% on a trade, and that will not affect absolutely anything that I've done throughout the whole year. So I can comfortably lose this trade, understanding I've spent the remainder and the first half of this year calculating my risk, taking profits, rewarding myself, withdrawing. So when you've actually covered those bases, and this is how it all falls into place, if you have all of your other sectors under control, then the trading aspect is the easy part. If you've understood the concept of profit taking, withdrawals, actually realizing profits versus unrealized profits, you're putting yourself in a phenomenal position that allows you to take extra risks within the market. In technical terms, after making several thousand% this year from investments and also from the crypto market in terms of margin trading, I could realistically still lose 20%. I could actually risk 20% on a single trade and it still would not affect my overall profitability for the year. Would I do that? Absolutely not. That does not make any sense whatsoever, but I'm just using it as an example that you can, when you have the correct mismanagement, take those extra plunges and extra risks in your favor. And this example was perfect. After seeing the drawdown, I looked at the short term, I understood that we may see a little bit of a push lower, and all I simply done was went on to the higher time frame. I looked at the charts and I said the overall goal, the overall vision, and the overall targets are still in line. Instead of, closing the trade early, why not ride out, let price go to your key levels? And if you were in the Telegram, you would have seen I provided the wick vision zone and all of the other zones as well. And by understanding this, I understood that even if the market goes into a bit of a drawdown, I can afford an extra percentage risk by minimizing my stop loss. Because even though I entered at around 8,300, I saw the choppiness of the market, which for me meant I would be entering and putting my stop loss around $8,000 at first, even 7,950 initially. Then once the market started moving lower, I already had a bit of room to actually allow the price to fall lower, but as it started nearing one of my major buy regions, I had two decisions to make, and that was I can either buy again and add the secondary position and massively reduce my stop loss lower, potentially exposing myself to an extra 1-2% risk, which wasn't really a problem for me. I was willing to do so, and there are times in your trading where you have to be versatile and volatile and actually adapt in line with the volatile and versatile market conditions. You essentially have to mirror the behavior of the market. So during these periods where the market was consolidating, moving slow, I understood the risk there. And again, going through the theory of risk, the biggest risk for me was not moving in the same temp as the market. The same way music moves in certain tempos and certain beats per minute, the market can move in certain patterns per minute, certain patterns per hour. All of this is in relevance as well. So that means if you want to be a DJ, and you want to mix two songs together, the best way to do this is to have two songs of the same BPM. A good example, let's just say 140 BPM. A lot of songs are 140 BPM, beats per minute, that is, of course. Now, if you want to mix those songs in convenience, you're more likely going to have a very fluent and very smooth transition from one track to the other if they are in line with the same tempo, if they're moving in synchronization with each other. And you will notice when it comes to market analysis, I'm always telling you our goal here is to move in synchronization with the market. If the market is moving 300 beats per minute or whatever it may be, 300 pips per minute, I have to be in line and understanding and adjusting myself to a tempo of around 300 pips or beats per minute as well, to ensure what the market is doing I'm closely in line with. And when I started understanding that the market was slowing down but it was heading to my key levels, all I simply done was reduce my stop loss a little bit lower. I didn't add any more positions because that would then double or potentially quadruple the overall risk allowed on this trade. And all I done was at an extra percent, and I understood that I've made thousands of percent this year. I can risk an extra 1.5–2% in the worst case scenario, and if that does get wiped out, what is the plus side? What happens if it doesn't get wiped out? What would justify, and this is something you need to understand when it comes to risk, what would justify your decision to take this specific risk? And this is what it all comes down to. If you can justify with a valid reason why you are taking a certain risk, then by all means necessary, it no longer becomes a risk. It becomes a calculated prediction or a calculated estimation. Even though an estimation is technically not calculated, it became a prediction that had some form of emotional and psychological intelligence and thought processing that went into it. So the best example to explain that one would be, I looked at this and said, well, in the worst case scenario, I'm probably going to lose around 3.5% of my overall account size if BTC continues to break $7,800. And what did I also think to justify this decision? So, okay, 3.5% is being risked, but if I look to the upside, I'm potentially catching a move of 1,000 pips, which means for potentially making a 3.5% loss, I could make a potential 100 to 200 to 300% return on investment on that specific trade. So when you're putting all of this into relevance, let's just say I was risking £10,000, I could have potentially made from that trade with a risk of 3.5% £10,000, I could have easily flipped that to around 20,000 profit. And just putting that into perspective and understanding that, hold on a minute, I'm potentially risking not even 0.5, let's just say I'm risking £10,000, but okay, I may lose £10,000, but what is on the plus side? Potentially 20, 30,000. That alone for me is more than enough to justify taking that risk. And is it even a risk? What happens if I lose it? Will I never see that money again? Of course not. The money will come back in the future. Money is in abundance. It's around us anywhere. And this is one of the biggest psychological flaws when it comes to newcoming in trading, because you understand and you lose a trade and you think it's over. I'll never make my money back. How will I ever recover? The truth is, money is absolutely everywhere. You can make it from all different kinds of means and all different kinds of avenues. Money will always return to you in your life if you understand how to attract it back. And this is a topic for another day. Podcast session wise, I'll definitely be going into manifestation, law of attraction, psychology, even conspiracies. I know you guys love some of that stuff as well. More than happy to throw some of that in as well, but definitely we'll be going down a more psychological path again in the very near future, covering some more aspects, manifestation, law of attraction, very important topics that I've been practicing for the majority of, especially since starting my teenage life. I got very heavily interested in this stuff and it's changed my life for the absolute better. But putting all of that into one brief final perspective, we are going for a very long-term trade here on BTC in particular. We are going for $9,200 to around $9,600, and we're now at $8,200 for BTC, seeing a nice $300 reversal from the $7,900 zone. Things are looking promising. XRP also looking to hopefully break out to the upside and see a very small retest before progressing higher. So all factors are pointing, all stars are aligning, things are looking great. When it comes to risk, you must understand risk management. If you are new to the markets and you are a trader, your goal should not be to, let's just say, risk 5%, 10% and try and make a quick flip. You're not going to sustain. You should not be wiping out an account, in a single trade or in a single movement, or even if manipulation occurs and slippage occurs, we should not be losing more than 2 to 3% capital, even during a very rare circumstance where slippage occurs. And slippage, if you do not know, is where there are not enough buy or sell orders within the market and the market goes highly illiquid. So what that means is, let's just say BTC right now is a good example. The current price point is around $8,200. Now let's say you've gone long at $8,000 and you're now $200 in profit. You have a stop loss at $7,800. Suddenly the market reverses and it goes all the way down to $7,000. So you've essentially lost an extra $800 in BTC movement because the market had no buy or sell orders to trigger your stop loss price. That means the market will automatically execute your stop loss at the next best price. Now that means if there's no orders, the next best price, which would be at the current market price of $7,000, on dollars would have been triggered. Now, even in those circumstances, if you are abiding by the principles of 1 to 2% risk, you will very rarely exceed, even in a moment where you should have lost 20, 30, or even your whole account. If you're sticking to 1 to 2% risk, you're not going to lose more than 5%, even in a horrific freak accident like a slippage event during fundamental news. So you should always be very well protected and very well hedged. Risk is always down to the personal viewer and how you view it. And to be honest with you, when it comes to taking trades, there can be risks, there can be fears, things can go wrong. The worst case scenario is you lose money. The fortunate side is, if you can understand risk management from the very early stages, you will never have to suffer, or you will never have to actually be a victim of the psychological implications that come with over leveraging and over risking. The truth is, when it comes to all of these people that cannot understand the markets, they cannot understand how to trade, they can never win trades. The truth is, it's because you're over leveraging so much. You're not allowing yourself room to succeed within the market. You are not allowing the trade to have breathing room. You are not allowing yourself to have room. And this is why, even when over the past few days I've been fairly quiet working on the platform, I haven't given too much attention to the charts, because I know they're going to come back around. I know my trade's still running. I know if it gets hit, I'm only going to lose a very predetermined, calculated amount. And that's why I've been silent. People have been asking me what's going on with the trade. Well, I'm still in the trade. I've been holding it this whole period, and just understanding this and understanding that by conquering the fear of risk, you will become very emotionless very fast, and this allows you a huge upper hand in life overall and within the markets to conquer your fears and achieve something that is remarkable. The majority of the world is consumed and constrained by fear, but if you can break away from the ideology of risk, you are going to succeed much faster and arguably further than any person around you who is currently, detrimented by fear ever will in their life. Now, guys, to end this podcast, the competition, make sure you are voting right now. Again, the links will be in this bio. I need you guys voting, and I cannot wait, because if we get enough votes, we will be doing this Wizard Wednesdays live. Well, not even a Wizard Wednesdays, it'll be a live webinar within the platform itself, and you are going to be seeing absolutely everything I'm viewing on the charts right now, alongside some crazy surprises within the platform itself. So make sure you're checking this out, and make sure you're also subscribed, push notifications, guys. I need you guys up to date, because with all of these surprises coming forward, you need to have those push notifications at the ready, because there may be a first come first serve basis. It could be a race to get there first. I need you guys subscribed on YouTube. I need you guys ready, because there is going to be a crazy 11 days coming forward from this very period. Now, guys, hope the Sunday is still going smoothly. Hope the podcast has been beneficial as always, and I'm looking forward to seeing you guys in that webinar if we can get enough votes by the next few days.